What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a mixed bag of SPY going lower but some of the other risk on assets like the QQQs and the ARK ETFs going higher. Will the market find support right here at the June lows? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.26% and we did see SPY gapping up in the morning and starting to run up towards trying to close the gap to the upside, but there was just way too much selling pressure at the bottom of that gap just below 371. And we did see SPY closing red yet again, down 0.26%. Now intraday we did take out the June intraday low and we have now two daily closes below the June closing low, so you can definitely see SPY is starting to break down. This does invalidate the backtest that said the June low would hold as the market closing bottom, but we have no idea how much lower SPY is going to go, and we know SPY is still risk off while it's below 390. Below 390, you need to move your risk level now to being below the June closing low, so your risk level that is closer to price action is now going to be this level at 365.86. If you're shorting the market, your risk is above this level, and if you're going long on the market, your risk is some percent below this level, and you need to manage your risk accordingly. Now there's still the possibility while SPY is in the downtrend that it's trying to get to 350, and yes, it could go lower than that, but that is going to be the next price target while SPY is trading below 390. The only way we are going to invalidate the downside price target is if we start to see price action on the daily chart making a higher low and then another higher high, and that could tell us we are seeing a reversal of the downtrend and seeing the very early signs of an uptrend. So this is a downtrend until it's not, because we do not yet have any price action that tells us the downtrend is over, and we only follow price action and trend on this channel. So with the price action continuing lower, we are going to assume any bounce that we get, no matter where we get that bounce, that is a highly likelihood it is going to be a lower high before the next lower low, because that is currently the trend and there is no reason to assume anything other than a downtrend until price action proves otherwise. Remember, the only way you follow price action is by not having any bias, and this is still a downtrend until we see something happening that says otherwise. So in the event we do get a bounce off of these levels, and if you are taking long trades, you do need to lock in your profits unless you are an investor that has no trouble continuing to accumulate if we go lower and you're willing to hold for at least 12 months or longer. As a trader, however, you have to manage your risk. And if you're trading long positions in a downtrend, you have to lock in those profits and you have to be sure you're ready for lower lows. So I really do think the market is very simple to trade right now because you are right here at the risk level and you should have a very clear plan. And if you don't have a very clear plan, go make one and then make sure when it comes time to hit the buy button or hit the sell button, it is part of your trade plan, and that way you don't get emotional. The only way you're going to get emotional in this market is if you're over leveraged, or you're on the wrong side of the trade, or you have no plan and you have no idea what you're doing. Otherwise, you should have a very smooth ride in this market and you should have very clear direction on what you're going to do no matter where we go from here. So look for that breakdown below 362 to start us on our way towards 350, or if we start to get a bounce, you want to look for that gap fill of resistance at 373.48, and if we continue higher, we're going to be looking for resistance right around 382 all the way up to about 385. And of course, our critical risk level remains 390. On the NASDAQ 100 QQQs, we are up 0.04% today, so we went absolutely nowhere. But intraday, we did test that resistance at 280, and there was just way too many sellers at that level, so we came all the way back down towards the June closing low at 271. And so far, we did see some buyers stepping in near that zone. So we have sellers at 280 and buyers near 271. So we are stuck in a trading range between 271 and 280 until we get a breakout. And if we break out to the downward direction, our price target is just a few dollars lower right here at 267.5. And that is still a valid downside price target while we're in the downtrend. If we break 267.5, our next target will be 258. And if we break 280 to the upside, we're looking for the gap fill and resistance at 284 and our critical risk level at 293. Know your plan no matter what happens from here if we break below 271 or break above 280, and then just act on that plan and manage your risk around those levels. In the Dow Jones, we were down 0.49%, and the Dow Jones continues to make brand new daily closing lows, and it looks more and more likely like the Dow is trying to fill that gap at 285, but it is having trouble doing so because the Bollinger Bands have not yet expanded to allow price to go that low. So we continue to expect a bounce in the short term, which would be a lower high before we go fill the gap to the downside. And while there is no guarantee that gap has to fill now, we do know is a highly likelihood chance that that gap will fill because it is a weekly gap, and there are very few gaps on a weekly chart. To the upside, we'll want to be looking for resistance right around 293.5, 298.7, and that gap fill at 300. And if we continue to bounce higher than that, the next resistance will be 305.8 and the risk level at 312. On the Russell 2000 IWM ETF, we were up 0.34%, so we did see the small caps bouncing and they were extremely oversold below the Bollinger Band. And we did not close above that resistance at 165, and we did see a retest of the June low at 163.75. If we break the June lows, we'll be looking for the next price target at 159.5, and to the upside we have resistance at 168 and the gap closed just around 171, and resistance at 174.7 and our critical risk level at 178. Again, even if we get a bounce, we're looking for lower highs and lower lows until we break the downtrend. On the ARKK ETF, we were up 2.08%, and we did see the ARK ETF bouncing off the support trend line right there, right around 37, but we are still below resistance at $40, and we still have the June lows that we could hit at 36.5. And if we break the June lows, we'll be looking for the next price target at 33.7. Above $40, we'll be looking more bullish, but the next resistance will be the resistance trend line at 42 to about 43. On the VIX, we were up 1.05% as we see the VIX continuing to close above 30 for the second day in a row, and the VIX is now breaking above our resistance trend line, which meant the VIX had to close above 32. As you can tell, the VIX is closing outside the upper Bollinger Band, so there is definitely increasing volatility in this market. But I will remind you that volatility does work in both directions, so this does not guarantee that we have to go lower. It just tells us it is going to remain a volatile market while the VIX is above 30. We really should be continuing to expect a bear market while the VIX is above 24, so even if the VIX starts to crush, we have a long ways to go before the VIX is back down below 24, and then we could start back into a bull trend as fear is leaving the market. On Bitcoin, we're currently down 1.2%, and intraday Bitcoin was all the way up there at 20,000, but we did see sellers at that level, and we're back down to the critical support at 19,000. You can see volume is starting to increase down at this level, so we are either going to break down through 19,000 and go down for the next leg lower at 17,000, or we are very soon going to see that bull breakout above 21 to about 22,000, and finally start bouncing off of this risk level and go back into a bull trend. I still think there's a high likelihood chance that crypto winter is ending, so I am looking for a bull run over the next 3 months, but I can't tell yet if we're going to hold 19,000 or test 17,000. On Amazon, we were down 0.64% as Amazon is still hanging around this price target at 115, and if we break this level, we're looking for the next leg lower at 106, and if we bounce from this level, we're looking for that gap close right around 126. On Microsoft stock, we were down 0.44%, continuing to get rejected from that resistance at 242, which means we could be heading down to the next price target at 231. Above 242, we're looking for the resistance right around the trend line and the resistance zone at 252. On Nvidia stock, we were up 1.51% as we see Nvidia bouncing off of the zone right around 122, and I still think there's a high likelihood chance that we're going to see Nvidia try to go close that gap around 142. You're getting risk off below 122, and there will be strong resistance right around 134 to 135, so keep that in mind. But I do think that we are seeing sellers drying up in Nvidia, which could lead to a strong bounce. On Tesla stock, we were up 2.51% as Tesla did close the gap to the upside, which was just below 286, but we did find sellers right there at the 50 daily moving average at 289, and we did close right on top of support at 283. You could take long trades off of 283, but if we break down, you're looking for a retest of 270. But if we do break down below 270, this is going to look like a double top, which will easily send us down there to close the gap just below 251. So you could be risk on above 283 to 270, but you do need to get risk off if we break 270. On Apple stock, we were up 0.66% as Apple did bounce off that support right around 150, but still finds resistance up here right around 154. Consider it a trading range until we see a breakout, with the bulls trying to break 154 to 155 and the bears trying to break 150. And the next leg lower will be 147, and the next leg higher above 154 will be up here right around 157. The financials were down 0.43% today, continuing to close below the June lows, and we still do have plenty of gaps to fill to the upside, so once we do find support, I do expect to see a counter trend rally in the financials. The industrial sector was down 0.33% today, starting to close the gap to the downside and still closing below support at 85. Wait to get bullish until we can get back over that support, otherwise you're looking for the gap fill to the downside. On the healthcare sector, we were down 0.3% as we continue to close below resistance at 125 as we continue to approach support at 120, so it does look like we are going down there to retest the June low. The energy sector was up 1.12% as we're finding support at the gap fill at 69, but we're still trading below the lower Bollinger Band, so we are most likely due for a dead cat bounce, which could take us back up to fill the gap right around 76. So jumping back over to the S&P 500, know your plan no matter where we go from here, because this is a very well-defined risk level. Whether you're shorting the market or going long, you are using the same risk level. You are just following whether price is above or below the level and managing your risk accordingly. We are currently in a downtrend, so there's no reason to expect anything other than lower highs and lower lows until price action proves otherwise. Have a trade plan, use great risk management, and remember, if you're getting emotional, you are more than likely over leveraged or repeatedly on the wrong side of the trade, which means you need to go back to the drawing board and figure out what you're doing wrong. Also, don't forget, I still have a promotion for 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to claim 50% off your first month of bank. Bank only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join Bank or the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.